Let's start from your interest towards the crypto world. Like, why crypto world?
Sure. Great question. And thank you so much for having me.
Yeah.
So, you know, I'll take you through my journey. So I'm a lawyer by training and was working in venture capital. And I was actually working on a transaction at the time that it really took a lot of time to put together. And it was a relatively small, single digit millions transaction that I was trying to syndicate. And I came across these guys in 2017 that had I think they raised 15 million in a private sale, and then they went ahead and raised 60 or possibly 80 million in a public sale. And this is back in 2017. And I thought, if I'm kind of working very hard to over many months to do a small capital raise, and in crypto, you can do one very, very quickly at a much larger scale in a matter of hours, minutes, or weeks. I thought it would be really interesting to kind of get started and try to work in the space. So I guess at that time I sniffed around and started attending events, and I was fascinated by the idea of a financial system that there's no trust, right? Like if I'm going to send money from my bank account here in Singapore to your bank account, I take it you're in Europe. There's a number of points of trust, and there's failure points. And so we have the Swift banking payment network, who are very evil and charge very greedy high fees that are totally uncompetitive, and can't say enough bad things about how high those fees are. But the reason we have that entity is because my bank might not necessarily know your bank, because I might need to send funds to any infinite number of places. And so this idea of a decentralized system where you can create trust by kind of crowdsourcing, which is really what Bitcoin set out to do, was fascinating to me. So I joined an investment bank that was focused on raising capital in this space, and that was 4 years ago. So I guess they say, a year in crypto is like 3 years in normal time. So I guess my 4 years in crypto are really like 12 years in the real world.
Even I'm fascinated by this particular industry. It's more of a curiosity for me still. I'm still learning a little bit, I guess. Still trying to understand all the ins and out. And if people ask me, I have difficulty in explaining how everything works. And how do you generally explain to people like who are not, let's say, crypto savvy, or at least interested towards this particular industry? How do you really explain how everything works? I struggle to explain that, right? But maybe you have a better way to explain, like, how do you do that?
Sure. Well, I think let's start with Bitcoin. That's usually where the conversation starts, right? So as I mentioned before, Bitcoin is a monetary system that is built to be very different to traditional currencies, right? And so we start with this idea of a system where I can send funds and there's no one needed to be trusted. We're kind of crowdsourcing the trust. So Bitcoin was designed by Satoshi Nakamoto, which is not the real name of the person or group of people that created Bitcoin. And Bitcoin was designed as a kind of an opposing force to the way that other monetary systems work. Other monetary systems, governments just print money, and an economist would tell you that it's okay to print money as long as the rate of economic growth is, where the money supply is increasing along with the rate of economic growth. But the money supply tends to outpace economic growth just a little bit. And if you look at a chart, and the St. Louis Fed puts out some great data on the US currency, this concept of inflation, where government money printing means that what costs $1 today used to cost less than $1 at some point in the past. And so what Satoshi Nakamoto was doing was creating a framework where we're having a currency that cannot be, the monetary policy is fixed ahead of time, basically. So Bitcoin is not intended to replace other currencies. And a lot of people talk about central bank digital currencies. Those, I think, are very exciting for people in the traditional financial world, very unexciting for me because I already have traditional currencies in my portfolio. They're not doing a great deal for me. They're, in fact, as I just mentioned, becoming worth less and less, theoretically every second of every day. So I'm not excited by central bank digital currencies. The technology stack is exciting. But I guess Bitcoin, I've talked a little bit about why Bitcoin was designed. Bitcoin was designed to be a unit of value that does not go down in value over time. In other words, it's a scarce asset, which means that the supply of Bitcoin is decreasing, not increasing. So what that means is that theoretically, Bitcoin is a scarce asset. Its value will go up over time instead of traditional currencies, which go down over time. So that's the kind of philosophical background to Bitcoin. And what I think that people often overlook, and there's this conception that everyone in crypto wants Bitcoin to take over all the rest of the currencies. Nobody wants that. We all need normal currencies to pay for stuff. But I guess whether you like Bitcoin or love it or hate it or think it's the worst thing in the world, there are a layer of people. And right now, that's somewhere close to 20%, 17%, 20%, who have been holding Bitcoin for a very long time. And what those people believe is that it is a stable store of value that occupies a similar place in the portfolio to gold. So I don't care if you like Bitcoin or hate it, those people exist. We can see it on the blockchain. And so there's a layer of ownership of Bitcoin and other assets that is people that believe that this is a stable long-term investment. And if you can stomach the volatility in the short run, it tends to be an excellent investment in the long run. I won't get too far down into that rabbit hole, but I guess, so there's two parts to the puzzle, right? There's this layer of people that believe, I've got this Bitcoin, I'm going to hold on to it forever because it's going to always go up in value, which, by the way, it has done. Every 3-year cycle, if you zoom out, the line goes up.
Yeah.
And it goes down and never goes down below the previous high price. But then you've got people that speculate, and that's what attracts the attention. The Wall Street Journal and Bloomberg and every newspaper you've heard of says Bitcoin is going to $1 million, and then it spikes and then it crashes. They say Bitcoin is going to $0. Bitcoin is over. So that's just the Bitcoin use case. And I think it's important for people to understand that, like it or love it, there's a speculative layer, and underneath that, there's a kind of long-term layer. Now, there's thousands of different cryptocurrencies. At Alpha Impact, we have one for our ecosystem, the Impact token. I don't have time to speak about all of those, but basically, there's a bunch of use cases. Bitcoin is a store of value, and then there's other use cases after that.
Mm-hmm. And like you mentioned, there are plenty of other coins, right? So there's so much going on, right? And I see maybe there are thousands, I don't know, right? And how does one really, look into this all cryptocurrencies and say, hey, this is where I should be investing? Because pretty much for investors, it's a open field, but it's very, very dark for some of the investors, right? They might say, oh, should I invest in this or should I invest in that? Like there's also Ethereum, which is a second runner-up for now, I guess. But how does one really look into this sector? It's so difficult to really put an eye on one single ball.
Yeah, and it's a very interesting exercise in the dynamics of investing. And I think what we've seen over time is that assets that once were very obscure and strange and weird, over time become more and more accepted. So what we're going through in the kind of crypto world is an explosion of interest from a very small number of people. The statistics on ownership of cryptocurrencies in most Western democracies, so Western Europe and Japan and Singapore and the United States and Canada, where I'm from, in most of those countries, it's between 15 and 21% of human beings who own cryptocurrencies. So we're in a stage where it's a very small number of people. Now, if you actually look at that number, it's growing exponentially, 200 or 300% every year in terms of number of people that own crypto. But it's important to understand we're at a very, very early stage. And so what we know about early stage, anything that's early stage in its kind of development that has a price, the market really hasn't found a price yet. And if you were to go back and look at the evolution of other asset classes, so I'm thinking of specifically commodities in the 60s and 70s, REITs in the 90s. I mean, when REITs came out, real estate income trusts, nobody really thought that income producing real estate assets was an investable asset class. And there were people that were saying that's kind of weird. We don't really want to do, we want stocks and bonds. That's what we want in our portfolio. We don't want this funky real estate stuff. And so every asset class, and by the way, that has starting in the 1980s, and as we famously learned in the early 2000s, derivatives and some of these exotic, really very beautiful on a mathematical level, but very damage inflicting when we think about derivatives and credit default swaps and CDOs. So, and I'm sorry, I'll try to have shorter answers for your viewers, but basically everything that's early stage, it's very difficult to price. And when things are difficult to price and they become exciting and a small number of people are speculating, which I mentioned, we tend to have a lot of volatility. So stuff goes up and down due to just market forces, supply and demand. And so I don't think there's any, I mean, if you were to think about Amazon in 1997, talking about retail distribution and disintermediating Walmart and cloud computing, which they didn't really start talking about until the early 2000s, people would have thought Jeff Bezos was crazy. And in fact, his share price went down something like 89% in the 2001 crash. So the point is, cryptocurrencies are not succeeding as investments because some of the cryptocurrencies are doing what they're intended to do, but some of them, there's a future anticipation of something that will change in the future. And that's what the market is excited about. And that's what's made some of these asset prices go up. So it's important for people to understand we're in very, very early days. Facebook, their share price was strange in the early days. Even if you go back before the IPO, the valuation of some of these things far exceeds what you'd expect. And that's not restricted to internet stuff. Beyond Meat, if you go back 2.5 years ago, was valued insanely high. So I think it's important to understand that cryptocurrencies as an asset class have really only been around for a short time, and we're in price discovery mode.
So based on your experience now with the crypto industry, how do you define money now?
Well, I guess there's two ways to look at it, right? One way of defining money, and it's an excellent question, but one way of defining money is it fungible, and is it accepted, and is it a store of value? A lot of my colleagues and counterparts in traditional finance would say that crypto is not money because it's so volatile. It holds, it just can't be held, right? And I think, are you in Belgium, Pramod? Is that where you're located?
Yeah,
right.
Yeah.
So for you, holding a euro is a pretty safe bet. And I think, sending euros, sending US dollars, Singapore dollars, Canadian dollars, pretty safe bet, right? But what we tend to see in some developing economies, and then I'm thinking specifically about Nigeria, where we've actually explored doing some work. And, when the Naira is going down 50 or 60% in a year, suddenly that volatility that you or I might not be comfortable with is a pretty good deal. Bitcoin might go down 80 or 90% in a year, but it's gone up, I think, 400% this year. So for someone in Western Europe or where I am here in Singapore, that volatility is not really worth it. That's at least what the traditional finance school of thought would say. But in countries like Nigeria, Venezuela, other countries where we have this massive phenomenon of inflation, it makes sense. So I really would define money as whatever is accepted as a means of value, or as a means of transacting. I have a bank account and I pay lots of stuff in normal currency, but there's also a growing amount of my day-to-day stuff that I do that's payable in crypto. And we've seen the rise of these merchant cards where you can spend crypto at a store, and I have one in my wallet and it has the Visa logo. It's accepted anywhere on the planet that Visa is used. So we're no longer in a space where that transition from in your crypto wallet to if you're buying a loaf of bread, that problem has been solved. So I really think about money as anything that's accepted as a means of transfer or a means of exchange, and that's fungible. Those are probably the main two for me.
Mm-hmm. You mentioned about the South American countries slightly earlier, and there is a big shift in the way they are now looking at Bitcoin as their main, let's say, tender. There's a big news there. What do you think about the rest of the world now, based on how they are taking the Bitcoin as a mainstream? Do you think the rest of the countries will follow?
Um, no, I do not. And it's important to, and we've talked a little bit about, we'll talk about El Salvador. El Salvador has, I guess, as of the day of writing this, I guess 1 day ago or 2 days ago, they accepted Bitcoin as legal tender. Interesting to note that El Salvador, to my knowledge, doesn't have its own currency. So they basically use the US dollar, which means that they're actually beholden to USD monetary policy. So, it's I wouldn't say funny, but it's very interesting that Bitcoin was designed to become a monetary system free from political influence. And we've now got a nation state, the first ever, that has recognized that cryptocurrency Bitcoin is acceptable as a means of exchange, presumably because they don't want to be reliant on the United States government. I mean, if you think about the risk of El Salvador, and I'll be honest, I'm not 100% au fait with the geopolitical situation in Latin America and every country, but if your primary currency is the US dollar and the US all of a sudden decides we're going to sanction you for something, and no foreign bank is allowed to deal with any El Salvadorian bank, that would be very bad news for the El Salvadorian people, for the El Salvadorian economy. So the move to adopt Bitcoin for El Salvador, I think, was a move of necessity. Thinking more broadly about wider, the rest of the countries, I think it would be very challenging for them to accept digital currencies. What I see happening is major currency blocks such as the euro, obviously the Chinese renminbi, that the Chinese government in July 24th mentioned that they have, their Chinese digital renminbi is live, the JPYC, the Japan yen coin. So we're seeing a rush of countries working very hard to produce digital assets, digital versions of their own currencies, with the same controls and oversight and supervisory abilities as they have over the rest of their economy. So I think that if Bitcoin were to become a national currency in 50 countries or 100 countries, there would be a concern, at least in Washington, Beijing, and I guess in Brussels, that there's going to be less of a reliance on traditional currencies. And less reliance on traditional currencies means that those monetary tools of controlling the rate of inflation and monetary supply become less valuable, I guess. So I think there's a very low chance that Bitcoin is adopted as a kind of a global currency. I think we'll see a rise of nation states issuing their own central bank digital currencies. And certainly we've seen Japan, China, the United States, Europe, and other places really make meaningful inroads into this.
Mm-hmm. And I've also, read or also saw a series, in Switzerland. I think one of the city, they actually widely use cryptocurrency. I forgot the city name, but definitely there is a city where even in the tourism office, they actually accept Bitcoins, as a means of payment. So, I mean, I was just thinking about other countries like the mainstream, where, the currency is relatively stable, just thinking about an example there.
Oh, I was just going to say, I wanted to come back to my point that, basically the geopolitical wall that exists today, in the Cold War, you had, Washington and Moscow, and it was how many missiles could they buy, right? How many missiles could they build? And there's this multiple of how many times could they destroy the whole world over with their nuclear arsenal. So this was the Cold War, and certainly in the 1960s, 70s, and 80s, that was the battle, right? Now it's about economic power, and what we've seen with large economies, they tend to want to keep control of their monetary supply, right? So I see the Chinese rush to build a digital renminbi as something they felt compelled to do to prevent Bitcoin from becoming a major means of exchange. Which, if that did happen, it would really make them not have the control they want over their domestic economy. And the same is true in Washington and other places. So I think forward-thinking countries like Switzerland, and hey, even in Singapore, we have merchants that accept cryptocurrencies. But there's a difference in my mind between individual merchants or perhaps regions and big nation states doing it.
Okay. And what do you think about DeFi in this whole ecosystem of cryptocurrency?
Yeah, it's very interesting. And again, DeFi, so let me just explain what DeFi is. Going back to 2015, a project called Ethereum came out. That project kind of innovated on something that Bitcoin didn't have by creating something called smart contracts. And smart contracts are basically contracts that execute automatically. They have logic built in. So if I'm loaning you my iPhone, and I say, okay, I want you to give me 1,000 euros as collateral, let's say, this contract would actually see, under this example, when you've repaid the 1,000 euros, then I would give back the iPhone. So I think it's really a system of contracts that automatically execute based on conditions that occur. And unlike traditional contracts, where I'm a man of the law, I suppose you could say, in terms of I've got a legal training, we go to the courts to resolve disputes. If I loan you money and you don't pay me back, then you will take me to court in whatever jurisdiction. So with smart contracts, it's basically automatic. You don't need any people, right? And so DeFi is basically an innovation where we've seen borrowing collateralized lending. We've seen a number of different protocols and use cases where previously you would have needed one of two things. Number one, trust, or number two, an intermediary. And what DeFi has allowed us to do is actually create even currency pairs. We can create liquidity between two currencies that normally would not trade, and create an incentive mechanism. So what we're doing is we're creating a financial ecosystem that does not require those two components, which is trust and intermediary. So that's really what DeFi has created. And again, very, very early days. So that last year there was a massive rush to invest. It was about this time last year, September, to invest in DeFi. All the asset prices went way up. And that's really what started the current bull run. So that's, I guess, at a very high level, how I've seen DeFi evolve.
Mm-hmm. And how realistic do you think in terms of DeFi being, let's say, mainstream, like, compared to the traditional finance system, DeFi being used, I don't know, maybe 5 years, 10 years down the line, being the mainstream, way of, I don't know, getting a loan or something, so.
Well, I think that there's a tremendous amount of risk that banks are under. And let's just take a step back. I mean, large financial institutions are under grave threat. If you go through the P&L of some of these large banks, Barclays, Citibank, Goldman, all of them, their businesses have been eaten away over the past year, line by line by line, by innovation, threats of disruption, competition from other firms. But we've seen a big, and this is probably interesting for your viewers or your listeners, we've seen a big push to move to fintech, right? So we now have Revolut, we have TransferWise, or Wise as they're now called. So I can send a transfer of, I don't know, 2,000 euros to you right now, and it would be probably 90% less than it would have cost 10 years ago using the bank. So what we've seen is that banks are being disintermediated by new players. So I think DeFi represents really the next step of evolution of that disintermediation and the threat to stuff that banks traditionally used to do, because of those two ingredients, right? Banks had trust. So we generally, I think most people probably hate the bank, but we probably trust the bank in most places, right? In where you live and where I live, I know there's lots of places where it's not true, El Salvador maybe, but we trust the bank, right? If the bank, there's trust. I'm okay with the bank owning my home because I know that when I pay my mortgage off, they're going to give me back that equity, right? So trust and the intermediary. And I talked again about this with banking systems. So DeFi is all the way off the deep end. And when I say off the deep end, I mean, we're at the cutting edge of innovation. I think a lot of that stuff will flow through. I think what you'll see is a rise of regulated, compliant firms that do this. And, just to give you a bit of background, cryptocurrency, I guess, started in early 2009 with Bitcoin. The first cryptocurrency exchanges didn't really start to pop up until 2011, I guess 12, 13 in some cases. And they only really became popular in 2013 and 14. So there's kind of a 4-year timing lag from crypto existing and crypto exchanges becoming popular. I think we're at that kind of year zero event for DeFi, which means that in 3 to 4 years, we might have some trusted platforms that a lot of people use. But keep in mind, even if you go back to the example of crypto exchanges, they were all 100%, literally 100.00% unregulated until Q1 2018, right? It's like 4 years later. So, and I think Japan, the JFC or JFA, I forget what it's called, but the Japanese regulator was really the first one to regulate crypto. So you look at a kind of 9-year lead time from inception to regulation and 4-year lead time to adoption. I think we're in year zero for DeFi. It will take time for that adoption to occur beyond a very small group of really excited niche enthusiast investors and users. And so I think that same time frame of, let's say, 4 years to mass adoption and 8 to 10 years to regulated companies like Coinbase that we really trust because they're publicly traded, that will take even more time.
Mm-hmm. And I want to now ask you a little bit of the question, maybe a follow-up question. When you said, like, earlier in our conversation, you said, okay, I saw people doing the transaction faster than me, using the crypto platform as such. And then that was more of a turning point for you to sort of, dive into this sector. You mentioned about the series of activities that you did in order to get to this point. Now, looking from outside the crypto world and now being in the crypto world for, you said, as said, 12 years almost, even though it's a 4-year, literally. What did you learn?
Well, what I've learned is that we're in price discovery mode. And what that has tended to mean is that prices of assets have gone up and to the right. I would go back to my comment before around the layer of people that are holding Bitcoin for the long term. Bitcoin, as the CFTC and Clayton Gensler from the United States SEC now has said, Bitcoin is out of the bottle. The genie is out of the bottle. It's not going back. You can't put the genie back in the bottle. Or as some people in the US would say, you can't put the toothpaste back in the tube. So whether you like it or not, crypto is here to stay. And I think it's important that people understand that we're in a very exciting and early stage in this asset class's development. So you should absolutely not take investment advice from some random stranger. And actually, to be honest, this is why we're building Alpha Impact, to give people an ability to have a place where they can learn about trading crypto and actually see if the person who's giving this information is as good as they say they are. So we're a copy trading platform that has this social media network built in. And I think, so by all means, don't take my word for it, but everyone should have some cryptocurrency in their portfolio. And another thing that I wanted to mention as well is you don't have to start with millions of dollars or even thousands of dollars. The minimum trade size on crypto exchanges is $10, right? So if people in the Philippines are putting $10 into this gaming app and quitting their jobs because they make more money gaming than they do from their actual jobs, what that tells you is that we're at a very early stage of something that I guess you could say the foundation is now built with regulation and compliance. And we have, unlike several years ago in 2016 or 2014 or 2013, when it wasn't clear which exchanges you could trust, which counterparties you could trust, we now have a set of exchanges that are regulated by the United States government. And Switzerland has done some great work. There are exchange traded products in Europe on the NASDAQ Nordic exchange with my friends at CoinShares. So there are safe places and safe ways to get exposure to this asset class. But I think my core message would be to everyone listening, just start with a little bit. And if that to you is $10, if that's $100, if it's $500, if it's $1,000, doesn't matter. Because what will happen is that your educational journey will start when you put money in. So that, and just coming back to the investment side, Bitcoin, we often talk about returns, but just for the kind of portfolio management folks in your community, Bitcoin as a risk-adjusted investment is superior to almost everything over the past 10 years. In fact, I think if you were to hold Bitcoin for 4 years, not for 2 years, not for 1 year, in 1 year you can lose 90%. But if you hold for 4 years, it has outperformed every other asset class, equities, bonds, commodities, gold, oil, everything. Equities came close in early 2020, but didn't quite make it across. So Bitcoin has been, if you hold for that 4-year period of time, if you can stomach the volatility, it has been a fantastic way of producing better risk-adjusted returns than anything else.
Mm-hmm. Now, you mentioned briefly about your company, what you do. So how do you gather the insights? Like you said, like you don't have to trust you, but then there are people like who are going to support you in that. Like, can you maybe explain that part a little bit more?
Yeah, sure. So so Alpha Impact. So the problem that Austin and myself, so Austin is my co-founder, Austin and I, when we taught ourselves how to trade crypto, we really tried to learn. And so what do? You ask your friends. You go on Google, you try to find a tutorial on YouTube. And what we found, and excuse me, both of us were at very different ends of the spectrum in terms of our risk-taking tolerance and approach to investment decisions. But what we found is that there's really nowhere that you can know. There's a lot of noise. The signal to noise ratio is very high. And so if you're trying to teach yourself how to invest in crypto, it's very hard to know which of these sources of information are trustworthy. So the thinking for us was really, how can we make a safe place where everyone can learn about cryptocurrencies? And the answer we came up with was, well, let's make a social media network where, unlike other social media networks where I can just say, hey, I'm the best trader in the world, you should buy this, sell this, buy this, sell this. It's not transparent. But what we do is we actually link the top traders. So the people on our platform who will be sharing have actually linked their exchange accounts to our platform. So what that means is you can see how good their returns are. You can see how consistent their returns are. Are they a DeFi trader? Are they an NFT trader? Are they a very highly lucrative trader? Are they a low volatility trader? And you can make a decision for yourself. And for people that decide they actually want to pull the trigger, you can actually copy that top trader while keeping funds in your own exchange account. So we're basically a technology provider. We allow customers to connect their exchange account to us. They never have to send their investment capital to us. So we never get to touch anyone's funds. But the difference between us and I guess a few other businesses that we found is that we will allow people to find that top trader to copy. And then also we allow that top trader to, or sorry, the customer to copy from their own exchange account. So we don't ever, our pitch to customers is you could find a top trader, you could see how good they are based on their real trading. You could start with $10 or $25. And you don't have to send any money to us for trading. We think that has a lot of ingredients that we were missing. And let me tell you, I lost a lot of money in 2017 and 18 doing it the wrong way. And what we're trying to do is we're trying to grow the crypto ecosystem by helping more and more people to do it the right way.
What is it that you get, like, in terms of like, do you get fees of what people sign up for? So how does that work?
So we have two types of people, right? So we have followers. They're the people that they want to follow a top trader. And then we also have top traders. So we have a number of top traders, and our impact token is traded very widely on Uniswap. And we're really grateful to be supported by some of the top traders in the industry. So I think we're now in a place where we have, I think our top trader has returned something like 145% over the last month. I'm number 4. I only returned 49% in the last month, but I'm working hard.
You already.
Yeah, but the point is, if you're looking at my profile, you can actually see what I'm trading. And so if I tell you, hey, Pramod, you should buy Solana, you can see if I hold Solana, right?
Okay.
So the idea for us is that the trader, anyone can be a top trader. This is not a platform for only the top 5 people. This is a platform where anyone could be a top trader. And what we've realized is that there's actually a lot of people who are excellent traders, but they have no following, right? They're not on YouTube. They don't have a channel. So we give them 2 ways to monetize. The first way is by, we charge our customers a fee to copy the top trader, and we share that 1 to 2/3 with the top trader. So they're already trading. They just plug in their API key, and we give them passive income from generating followers. And the second way is that we allow, similar to Patreon, we actually allow the trader to customize what customers will see. So what that means is some traders will want you to see their portfolio, they'll want you to see their trades, they'll want you to see everything. But other traders might want you to pay for that, right? So we allow them to customize. Maybe they're a new trader, they only want to charge $5 a month. Maybe they want to charge $10 or $100 a month. So there's kind of this premium functionality where we have this Patreon. And then the second one is the share of the revenue, that the trading fees that we generate.
Mm-hmm. And what can you talk about the impact it has, over, let's say, people who have signed up now, your customers who were, just learning how to trade? Like, for example, you said $10, using $10. Can you maybe share some of the experience, like how the growth has been for some of the traders, perhaps?
Yeah, so our platform is, we're just finalizing the rollout now. So we're in a beta where we're just focused on the traders. So we're actually really excited that we have up to $100,000 of prizes for the top traders. And unfortunately, we can't just give it to one person. So we have a whole bunch of prizes
Give it
for
to
a
me
whole
as
bunch
well.
of traders.
I will sign up
But
today.
hey, come on over. You can connect your Binance account, and it'll be great. So we have 4 competitions, right? We have one for plankton, one for shrimp, one for lobster, and one for whale. So the idea for us is, of course, that small traders will get a small prize, big traders will get a big prize. So we're actually running these competitions to really build our relationship with the traders. We have 20,000 of them in our community. But there's a lot of them we haven't heard from. So we're really excited to be running these trading competitions. Excuse me. So the journey so far has been really to focus on those top traders. And so the customers, we see them joining us later, maybe in the next month or so.
Mm-hmm. So when do you expect this to go, let's say, public live? Like, can we say that? Or like, how do you?
Yeah. So everyone can sign up. So all the traders out there. So we're now recording. Well, let me just ask, when are we going to be posting this?
It could be early next week.
Got it. Okay. So we're focused very closely on the traders today. That takes us probably through the rest of September into October. The copy trading functionality we see coming out at some point in October. It could be first week of November. So we've actually been building this since February. So, I've aged 5 years since then. Of course, you could see all the wrinkles. I'm actually 19, but just have living in the body of a 35-year-old. And so, so we'll be launching in the next month or so.
Yeah. Okay. Let me, try to speed it up then, just for you. Next week, it would be fine, I guess.
Sure. Yeah. And we have our impact token is being traded widely on Uniswap. So, some of our early participants have had, let's just say, they've had a good experience holding the tokens, and we're very confident that when the platform launches, that will kind of exponentiate the growth. So it's felt like it's taken us a very long time to get here, and now it's really exciting to be supported by our fantastic team. And I want to give a shout out to Austin, Chowen, and on the dev side, and our lovely marketing team as well.
All right. And what's next for you? Like, other than just making it live, there must be some other challenges that you're trying to solve, within your platform. I'm sure that's something that you're already thinking about and going into the next phase. Can you maybe, point out 1 or 2 things that you would like to maybe fix in the next quarter or so?
Sure. Well, one of the big things that I think we're excited about in the short run is we've had a lot of people who have been asking us about whether or not we'd consider doing an NFT. And we've kind of settled on the fact that we will do one. And I think that the real focus for us will be I'll tell you right now, I don't own any NFTs. I probably should. Maybe I could retire sooner if I did. But I'm running a business. I don't have time to figure out what's good. And I also don't own any art. So I can't look at something and say, this has intrinsic artistic value. If I buy it now, it's going to go up later. I just don't have that skill, right? I'm a finance guy. So what I tend to think about is, well, can we create an NFT that has some functionality on our platform. And I think that NFT launch is something that we're really excited about. Not an NFT for the sake of an NFT, but one that would actually unlock functionality. And you can imagine, higher interest rates on our staking pools, more functionality available. You can follow more traders. So I think this is a really great way for us to build a relationship with the community in a way that's going to really allow people to kind of own a piece of real estate, I guess you could call it. So that's something that we're excited about. I think in terms of solving problems for our customers, our vision is to be exchange agnostic. So we connect with a small number of exchanges now. That number is increasing over time. So it's really very, we need to connect to every exchange. Well, not every exchange, but many exchanges. Let's just say all the good ones. And I think they know who they are. And we have a lot of them. Yeah, well, there's at least a handful. So, we really need to be in a place where we're connecting to lots of exchanges, right? It's not going to work if this is just for these customers on this exchange. It needs to be for every customer on every exchange. And then we really become a conduit to solving this problem. And the problem that we set out to solve, Pramod, was, can we make crypto more accessible in a way that allows us to grow the size of the industry? Because there's a lot of stuff that's happening in crypto that won't happen when it's a bigger market, right? But it's just such a small market and a lot of people don't understand. So the vision is, how can we democratize access for the masses and give those traders an ability to monetize their activity?
All right. Hayden, I think we've covered a lot of topics, very interesting topics. And I know that you've been in this industry for a while now, and I can see that, why you said it, you've spent already 12 years, virtually, I guess. It was wonderful talking to you, learning about your experience, learning about your company. And I'm definitely looking forward to your beta platform being live, and then seeing how you are going to implement the NFT part in the next year, perhaps. And I'm really looking forward to talking to you when it is live again.
Fantastic. We'll try not to keep you waiting that long for the NFTs. So let's schedule something else. I'd love to actually, when we're live, to maybe do a demo on the air, and we could work something together.
Absolutely.